Hello! A 1031 tax exchange, also known as a like-kind exchange, is a method used by real estate investors to defer capital gains taxes when they sell one property and reinvest the proceeds into another property. To successfully execute a 1031 exchange, you need to follow a specific set of steps. Ensure that your property qualifies for a 1031 exchange. Both the property you're selling, the relinquished property, and the property you intend to purchase, the replacement property, must meet certain criteria. Both properties must be held for investment or used in a trade or business. Both properties must be of like kind, which generally means they are both real estate. The replacement property must be of equal or greater value than the relinquished property. You must identify potential replacement properties within 45 days of selling the relinquished property. You cannot directly receive the proceeds from the sale of your relinquished property. Instead, the funds must go through a qualified intermediary, also known as an accommodator. That person or entity will hold the funds and facilitate the exchange on your behalf. Market and sell your relinquished property as you would in a regular sale. When you find a buyer, inform them that you intend to complete a 1031 exchange and make sure the contract specifies this. The qualified intermediary will create an exchange account to hold the proceeds from the sale of the relinquished property. Within 45 days of closing the sale of the relinquished property, identify potential replacement properties in writing and provide this information to the qualified intermediary. You can identify up to 3 properties regardless of their value, or any number of properties as long as their total fair market value does not exceed 200% of the relinquished property's value. Within 180 days from the sale of the relinquished property, or by the due date of your tax return, including extensions, for the year in which the relinquished property was sold, whichever is earlier, acquire one or more of the identified replacement properties. Make sure the purchase contract reflects the 1031 exchange. Inform the qualified intermediary of the purchase of the replacement property, and the qualified intermediary will facilitate the transfer of funds from the exchange account to complete the purchase. Even though you've deferred your capital gains tax, you need to report the 1031 exchange on your tax return using IRS Form 8824. It's crucial to work with experienced professionals, such as tax advisors, real estate agents, and a qualified intermediary, when undertaking a 1031 exchange to ensure compliance with IRS regulations and maximize the benefits of the exchange. Additionally, remember that 1031 exchanges are subject to specific rules and deadlines, so it's essential to carefully follow the timeline outlined in the IRS regulations.